who joined during the breakout time. This is our virtual Faith in Numbers part 2. We're doing this as a way to kind of change our system from the last 4 years of having a day-long conference, and now we're doing some smaller virtual options for you guys. Our goal is to provide content that's relevant and helpful to you in your ministry and in your organizations. So we're always looking to help in that way. If there's other topics or ideas that you have and you'd like us to cover in any upcoming webinars, we'd be happy to hear from you. We definitely, believe that, if you've got questions, we want to answer those. So I'm going to switch gears here. This is being recorded today. And so if you have any questions, please put them in the chat and we'll happily answer those later on. Okay. All right. So are we good? In order to see how to choose the right accounting services? Fantastic. So today I am going to spend some time talking about accounting services and assurance services, and what does it actually mean to have an audit versus a review, a compilation. It's a conversation that I have quite often, actually, and I figured it was a good time to to spend some time laying this all out for you once and for all. This way we can kind of share what we do and what is the purpose of maybe some of the services you're looking for. So believe it or not, I get this question all the time. We get phone calls, we get requests from our website, from clients, from other churches saying, hey, I think we want an audit. And this is an interesting question to me because I always end up asking back, well, why? And what do you think that means? So typically what the responses that I get are, well, we really want to have some assurance for our congregation that things are good. We really want our organization to be, in good standing. And so we think it's time for an audit. And so I typically find that that's not the end result of what they would like. But it turns out maybe they're looking for just some second, opinion on a topic, or they're just wanting some feedback on their, internal processes or policies and things like that. So here we're going to kind of break this down. What does an audit actually mean, and what are their other options? So let's scroll on. First question to be asking is, who is asking? Now, just because you want an audit or you want to do something, maybe there's a reason. So is there a lender asking you a question? Because before we want to take on a service, it's really important to know why and if there's a purpose for it. So typically they're calling because there's a lender that needs an audit if they're going to get a mortgage. Maybe their board of directors has asked specifically for an audit. And it could be in your bylaws. So these are just kind of different things that have maybe generated the need for an audit. Your congregation could actually be interested in having some just greater assurance, or you want to provide that assurance for your congregation, or even for those that are donating to your nonprofit. If you are a church and you've heard of the ECFA and you're looking into being accredited, or maybe you already are accredited with them, they actually require an audit if you have more than $3 million in revenue. If you get between 2 and 3 million, you have to have a review, and less than 2 is a compilation requirement. So maybe that's another reason that now is the time that you're actually interested in pursuing this path. Finally, the last couple is maybe there's a change in your personnel, or there's a change in your treasurer position, and now is the time to basically make sure things are kosher before the next person comes in. We worked with a couple of clients that had that situation. They really wanted, the person that was leaving really wanted that assurance that things, were in good standing before they left, in case somebody were to bring an allegation or an accusation, that they wanted that buffer and that stamp of approval, so to speak. And then finally, if you are a nonprofit other than a church, you might actually be required to have an audit. So if you have more than $500,000 in contributions every year, you actually are required in the state of Wisconsin to have an audit, for example. So, each state has different rules and regulations in terms of the different charitable standards for when you need an audit versus a review. But a lot of times the churches don't fall under this category. And so there's usually other reasons that they would want an audit as opposed to a nonprofit. I think most of all, though, is this desire for transparency, and all of these parties involved that are asking or requiring are basically looking for that transparency and bringing in an outside perspective, an outside party to help establish that, and then increase the confidence in the numbers themselves. So before we dive in too much, I just want to go through the actual definitions of what these main assurance services are: a compilation, a review, an audit, and then everything else. I don't know if you've heard these terms before. Most likely you have if you're on this call, but we're going to kind of walk through these. So these are the basic different assurance services. The first one being a compilation, and this is essentially the lowest level of assurance. We don't provide any at all as an independent firm. And we are essentially just taking the information, the financial data, and putting it into a nice format that's in accordance with the generally accepted accounting principles. We provide you the financial statements, the balance sheet, the income statement, sometimes other footnotes, but sometimes not. So they're not actually required, and those can be, you can select to omit those. People often get compilations because the bank says that that's all that's needed, or the board itself would like some form of compiled financial records by an outside party, and they would just prefer the lowest impact, the easiest approach, and that is completely acceptable. Again, like ECFA requires a compilation less than 2 million. The thing is that, again, no assurance is provided, and so sometimes there is a misunderstanding that it is more than it is. So that sounds very simple, but it's often misunderstood. So the next level that we can provide is a review. And this takes up the assurance one more notch. Basically, we look at your financials. We do a lot of asking questions, looking at trends. We will analyze kind of the different financial pieces and how they fit together. We will require information if something doesn't make sense. If after our inquiry, we conclude that something is wrong, then we will dive into that area a little bit more, but we are not initially starting out by saying, provide us schedules, provide us substantiation, provide us invoices like we do for an audit. And so this provides some level of assurance. So in the opinion from an outside firm, we can say we have limited assurance and that we're not aware of any material modifications to the financials themselves. So, this might be your best bet if obviously if a lender needs it or something like that. But if you want a bit more assurance than a compilation, but are just looking for an ease into a process like this, this might be a good option for you. We're going to provide you the financial statement report with all the required disclosures, but really other than that, that's the extent of a review. So this is kind of another step up, but again, the next and final step is the audit itself, which again is providing the full assurance. So we can say that we are not aware, but we've also can say that the financials are free from material misstatement. And when we say material misstatement, that is based off of a calculation that we do as auditors to determine what is material in nature. And so we test based on that calculation and can provide assurance that everything above that threshold is accurate in accordance with, again, GAAP, generally accepted accounting principles. This is obviously the highest level of assurance. This is what most people think when they want an audit is that there's that stamp of approval. We test the balances, we look at supporting documentation, and not only that, we are actually looking at your internal controls. We're performing an assessment of those controls. We're walking through the processes, looking at some, examples of the documentation of controls. And that is honestly, I think the best part of an audit that the other two don't provide, is because you are not only looking at the numbers, but the system with which the numbers are generated. And so if you can rely on the system itself and the processes during the year, then you can have a lot more assurance on the quality of the numbers, even if, the auditors are not around. So the final product is that you get a set of financial statements with the required footnote disclosures, but then also a letter to governance at the beginning of the audit and at the end of the audit. And this kind of explains the audit process and just the expectations, anything that maybe we had issues with or didn't, that would be disclosed there. And then what's often termed as the management letter, this is where we can provide recommendations to you, either general business recommendations, things that we see, in our viewpoint as auditors, we see quite a variety of organizations and practices, and have been able to kind of glean best practices. And as we see, how your organization or church compares to some of the best practices, we can recommend things. And finally, if there's actual weaknesses in the internal control structure, or maybe some deficiencies, things that we see as opportunities, unfortunately, for fraud that could occur, we will report those to the governing board and to management, so that you are aware of maybe some areas of weakness, so you can improve upon that, and have, again, a stronger internal control structure. So we don't provide those recommendations or internal control letters with a review or a compilation. Again, it's just different standards. So auditing, getting an audit can be a sign of being a proactive organization, caring about the strategy long-term, getting recommendations, and getting that sort of outside lens and expertise from industry experts. And then also exposing risks is a big thing that audits can do. It not only looks at the past, but it does look ahead at the future. And then most of all, it does provide that assurance and increases the transparency that's happening in your organization. I think in today's day and age, transparency is really valued and important. And that is another reason why doing these sort of processes and getting these sort of services can be really valuable. But it's certainly not the be all end all. And so auditing in and of itself may not be the best solution. And I'm just going to kind of walk through a few things that can be misconceptions about an audit. So here's the things that we typically hear. The audit will help me find fraud. How many times have you heard that? And do you think that even yourself? Now, the thing is that an audit is not designed to find fraud. That is a fraud examination, which is a totally different engagement and a different certification. But an audit, if an auditor through processes does uncover fraud, they are required to report that, obviously, but that's not our goal. And that is not our focus or aim. So sometimes people say, well, we got an audit, therefore we have no fraud. Unfortunately, that's not the case. And again, we are opining on a material misstatement level. So there might be smaller amounts of things going on that just didn't come into the scope of the audit. We're not looking at every dollar. We're not looking at every penny. We are looking at a certain threshold and up. It would be too inefficient and too costly to look at every single dollar. I don't think anybody would want that either. So the next one is that an audit will clean up our books and will fix all of our numbers and everything. Now, granted, an audit will help make things accurate because that is important, unless we're unable, unless there is a disagreement where the entries are not corrected. And so now we have potentially an issue with our opinion being modified. But an audit is not designed, the goal of an audit is not to clean up your books. That is quite a messy process if that's the goal. And I would recommend something else in order to do that. The next one is audits will assure people that everything is accurate. So again, is this misconception that somehow an audit is this magic wand that everything is good and kosher and we're above reproach in everything. That also does not what an audit is doing. It is certainly providing assurance that things are in a better position than maybe otherwise, but it doesn't mean that everything is perfect. Audits are simple is a thought sometimes too. Like, how hard can it be? Audits are quite an undertaking. They're not something to be taken lightly. And there's certain things that you want to assess in terms of whether you're really ready for an audit. We are looking at a lot of things. We are asking a lot of questions. It's a lot of time and energy and dollars. And there are certain things that we are required to do regardless of the size and scope of the audit. Administrative requirements, and then just auditing standards require us to document a lot of things. A lot of things that oftentimes we find are surprises to our clients. They don't, why is this covered under the audit? It's because it's required. So, and then last couple ones here, auditors are only focused on the past. It's all historical. What's the point? We already know what happened. Why do I need an audit? That's actually, it's true, we are reporting on the past, but really the goal of financial statements, again, is to help the users of the financial statements make decisions for the future. So an audit report can often be a really nice tool for planning ahead, for projecting into the future, reserves. Where's our financial position at right now? Are we in a good are we healthy? Are we in a good position as an organization? How do we compare to other groups? So it can be a helpful tool to think and project forward. And then the last one I hear a lot is, well, I'll just get a review and an audit and I'll kind of alternate year after year. That'll help me kind of save money on the fee itself. And the truth is, if you get an audit every year, we actually have to audit both the beginning balances and the ending balances every year. And so you are essentially just getting an audit every year, but you're not getting internal controls every year. So the cost in and of itself may not actually be much different. It'll just be in different years. So you're going to pay a little bit more in the other years than in the less. So in the years that you do a review. So that's not typically something that we recommend, but it can be an option for sure. So audits themselves are, they're not as horrible as maybe they sound, but they can also be quite an undertaking. So it's not something to just quickly decide, like, let's do an audit. But they really will help your organization be stronger if you are ready for them and see the value in them going forward. Here's a couple things to think about in terms of if you're ready for an audit. So do you have written documentation on your policies and procedures? We will ask for this. It will save you time and energy and money if you already have things documented, because if not, we have to go through and inquire and then document it ourselves. It's also a sign that your organization and your church is just a bit more structured and organized, which is great. Do you have accurate financial records for 2 years? Now, this is assuming your first audit ever. We would have to audit, again, the beginning balances of the year as well as the ending. So we need both year ends. If you're a 12/31 year end, you would need both this year, 12/31/2020, as well as a 12/31/19 to get that first year going. Is everything accurate and ready to go? Do you have internal controls in place? If the internal control structure is fairly weak, that might actually pose a problem for us to be able to provide a clean opinion on the financials themselves. Do you have schedules and documentation for balances? We will ask for all of these things in an audit. And so if these documents and schedules are not ready, it can be a lot of work to prepare those last minute. And it can drag the audit process on really long if things aren't ready or available, or if, you can't find the documentation from years ago. It also really helps if someone in your organization or on your board is kind of aware of generally accepted accounting principles, who can understand the audit financial results. That's not, I wouldn't say it's like a requirement, but it definitely helps to be able to work with the auditor and be able to answer their requests. And then last of all, something just in the last couple of years, every organization, every nonprofit and church is required to report all of their expenses in functional categories, basically in their program categories and their administrative categories and fundraising. Now, there are certain expenses that go across the different functions. And so if you don't have a current system that allocates how those expenses are spread across the different functions, that can be a difficult process as well. So these are just some things that I've found are helpful for knowing whether your organization or church are ready to be audited. And then a couple things to think about is, which firm do I go with? And there are certainly a lot of options and out there, there's a lot of great firms. And so the question is, how do I decide which firm to go with? So here's some things to consider: experience, certainly in nonprofit and church. If they don't understand that, really not going to be a great fit for you, because it is a unique industry. It's not the same as for-profit accounting. Are they committed to quality and continuity of their engagement team? Are they independent? If they're not independent, then really they can't be providing an opinion on an audit in the first place. And so we just recommend getting proposals unless you have an existing relationship where you've already kind of vetted a firm and you know the quality of their work or who they are. Because this proposal process will allow you to kind of get experience, documented, their qualifications, their fees, and what they're basically promising you, and you can compare. These are, again, this is just auditing. And so now I just want to take some time to talk about what else can you get besides audits, compilations, and reviews. What you might find is that none of those really are what we really want. We just need somebody to come in. We want you to look at our stuff. We need help on this little area. We don't want to pay for a full-blown audit. You can still engage with CPA firms or a CPA in these areas. And we find that this is actually quite helpful across the board. And we work with a lot of groups doing these sorts of services. So agreed upon procedures. These are things that you and maybe your board or the priest will come together and decide, this is what we want you to focus. We want you to look at our bank reconciliation process, and we want you to look at the way that we review financial statements. And that's all that we want you to look at. Maybe there's specific internal audit processes or consulting that you want us to do, and you want us to come in and just review areas like in our month-end close. How are we doing? Can you give us some perspective from your breadth of knowledge? Is there any recommendations that you might have? We also do a lot of internal control review work, where we'll come in and we'll just ask about your systems and processes, and we'll kind of just talk to all the different parties involved and come up with some recommendations if we see any concerns. But maybe there's really none. Maybe there's just a few things that you need to tweak, and you actually have a really good system in place, but you don't know until somebody can evaluate that. We also provide trainings. And then the last one would be things that what we call is the phase-in approach. And this would be something where maybe you want to have an audit in a few years, but you know you're not ready now. We come in and we can help basically assess your internal controls in the first year, give you some time to implement those. We can help you in the next year do some accounting work to get ready for an audit in the third year. And we found that that's actually really effective for those that are interested in kind of working their way up to an audit, but just not ready yet. And then lastly, these are just some things to consider in terms of what should I choose? What's best for us? What is, again, the goal of the product that you're looking for? Are you wanting to apply for a loan? Are you needing to provide something to your congregation? Are you providing something to donors? Are you applying for grants? Are you just providing something to your internal board? All those factors come, to help you decide whether you want an audit or just consulting work or a review, etc. How often do you want these services to be provided? That's a good conversation to have in the process. How ready are you based on that checklist? If you're not ready, I don't recommend going to an audit. Start with some of the smaller steps towards that consulting work. Maybe that's actually where you end. Maybe you never get an audit. I don't think, even as an auditor, I don't think every organization should have an audit. And I know Melody will agree with that. And then, do you have the funds to actually afford some of these services? And maybe that's something you plan ahead for. What's your staff availability? Is there somebody on board who can actually manage this process? It's not just something you can just hope somebody will figure out how to run this process. And then, are you ready in terms of like the quality of your records, your accounting records, and then your basis of accounting? So there's a couple of ways that people record their financials, and I'm sure you're aware just in terms of how you do it. But if you're doing it on the cash basis or a full accrual and then somewhere in between. So all of those factor into the type of services that you might need. So as you just think about these factors and considerations, there's a lot that goes into that question. So we come back to that question of, hi, I'd like an audit. This is all the things that go into my mind as I answer that question, because it is really, it's not as simple as, yeah, let's do an audit. I have been part of audits that are both amazingly successful and also quite painful because of these various factors. And so sometimes you have to do it. And so you'll figure it out. Other times, if you didn't need to do that, then maybe there was a better option. And so that's our goal, is to help you kind of today, at least, to think about other options, think about maybe there are other ways to gain that sort of assurance, that confidence, that transparency. I mean, if that's your goal, I certainly support your desire to be transparent and provide that assurance, but thinking about all the ways that can happen. So I am gonna wrap that up now and pass it over to Melody. Happy to take questions afterwards. Emily, is there anything in the chat right now before we move on?
I think we're good right now.
Okay, great. I'm gonna stop sharing and pass it over to Melody. Okay.
Welcome. As Hannah said, it's great to have you all here. And what I'm going to talk about a little bit is preparing for year end, as that's just around the corner. It's amazing that we're already so late in December. First thing I want to point out is that there is a difference for some organizations between December 31st and a fiscal year end. A number of churches or organizations are June 30th year ends. So it's important to distinguish the tasks between those. For December 31st organizations, your list kind of doubles because you've got some tax and calendar year obligations to fulfill, as well as your year end reporting wise. So some of the things to consider. From a calendar year, the things that are important in terms of reporting fall into primarily these 5 areas, the big ones. So we're going to talk about what impacts the employees, the ministers, contractors, donors, and then a few other kind of December year-end considerations. First off is employees. Obviously, they get a W-2 at the end of the year. So that's one thing I'm often hear is, January is a busy time getting all those W-2s prepared. But as you're preparing those W-2s, there's a few things to consider. One of the most frequent errors with W-2s is the area of what is a taxable fringe and what needs to be included on the W-2. So if, let's say, all of your employees are given a church backpack for Christmas with the church's name on it, etc., does that have to be included on the W-2? Generally, people would say no, because that's what's considered under the IRS code a de minimis fringe. But what if instead of that same backpack, let's say the backpack has a value of $25, you give them a $25 gift card to go to the bookstore or a local store to get what they want instead? Well, here the IRS changes it, because according to them, a de minimis fringe is something that you don't have to report because of the administrative burden. But cash and cash equivalents are not considered to have an administrative burden. Therefore, those always have to be included in the W-2. So if you've opted for gift cards, that has to be included as compensation on the W-2. Other considerations are potentially things, we've run into situations where the church has a school. And if employees get a discount on tuition, that's a taxable fringe because you're getting a benefit for that. So those kind of things need to be considered. The other area here is gifts, especially to employees or ministers from the congregation at year end, not necessarily from the church. And you have to be clear on who requested the gifts and how that situation was set up. If it was something announced from the church is responsible and does need to track and get information on that. If it's something that's more, just generosity of an individual that was not solicited, then that's not something the church has to report or be responsible for. The individual employees would be responsible for potentially picking up the gift, if applicable, for their personal tax situation. This time of year is also generally when you have your annual benefit enrollment for various programs, depending on what your organization offers: healthcare, dental, life insurance, the health accompaniment plans, childcare plans, those kind of situations. So it's important to make sure that that is done as well at this point and communicated. There can be a lot of complexity around those benefits. Here is one of those areas: if you don't have HR expertise in-house, it may well be warranted to work with somebody on helping you navigate through that system, because there's a lot of requirements there and a lot of documentation that has to happen. And you want to make sure that they are plans that meet all requirements and do not have any bias inherent in them. Then some of you may be aware that there's actually a new W-4 form. So when you hire a new employee, you generally have had them complete the equivalent of a W-4 to help let you know what you should be withholding for their taxes. Well, because of the Tax and Jobs Cut Act and the way the tax changed in terms of the exemptions, we now have to adapt, or the IRS had to adapt, to make a applicable form that corresponds with those changes. So that's the updated W-4. Anybody starting after January 1st of 2020 should have had this new form, as well as into 2021. You do not have to go back, however, to employees that were already on staff and have them do a new form. You can. And if an employee has traditionally found that their withholdings don't really match up with their tax liability when they do their tax return, there is an IRS link for a tax estimated calculator to accompany the W-4 that can prove very beneficial. The whole point of the W-4 is to hopefully get a better alignment between that tax liability and what's withheld, so that you don't end up at the end of the year with either a large tax bill or a large refund. You want to be closer to being right on the mark. And then the other thing to consider at the end of the year is if there's reimbursements, because depending on what the expense reimbursement is, again, that may be taxable. So let's say, for instance, that you give all of the pastors and associate pastors $75 a month car allowance. They don't have to have anything turned in, and it's not an accountable reimbursement plan. that has to be included on their W-2 because that's taxable income. So what's recommended instead to avoid employees having that taxable income and not having to track it on the W-2 is having an accountable reimbursement plan. And there's criteria around having that plan. They're fairly simple. There's 4 criteria around having a reimbursable plan. But if it's a reimbursable plan, then the employee can be reimbursed for what they actually incurred as an expense, and there's no W-2 or personal income tax impact. All right, moving on to ministers. Obviously, they are a unique element and a unique employee, and the IRS views them differently, and there have been many cases, obviously, around this and ongoing challenges. One of the more recent challenges is the housing allowance. The general feel in the profession is, based on recent decisions, that this is likely to stand and is not really subject to being reversed anytime in the near future. It likely will be challenged again at some point, but at this point, there is not anything that really is pending that puts that at risk. So that's a huge advantage to the minister because they can then have that housing allowance as part of their salary and not have it taxed. Now, the key thing that I have found in churches is they don't realize, though, that for that housing allowance to be applicable and for it to be allowed for the minister's personal taxes, it has to be approved and documented on a prospective basis. So I've had churches, sometimes I go in and I talk to a mid-year and I say, okay, show me your documentation for your housing allowances. We don't have any. Have you been giving them a housing allowance? Yeah, well, that's a problem. You can then right at that point, make a resolution or document an approval and carry it forward, but you really should go back and take the salary pre to that and reclassify it as taxable salary, not housing allowance. Because if this is challenged, it can be a significant penalty for either the church, the minister, or both. So that's an important piece around that. One of the things you may want to get in the habit of doing is with the budgeting process every year that you do this as part of that actually documenting a housing allowance. The documentation can vary. It can be more generic where it covers a longer period. For instance, it could say, unless there's other pending or superseded information, 30% of the minister's salary is allocated as housing allowance each year. And then that stands for an ongoing period. The best and probably best practice around this is to have it once a year reviewed by the board, put in the board minutes, and have specific dollar amounts put with the board, with the housing allowance that the board is approving. So I see a minutes that says, okay, Pastor A, B, and C, here's their housing allowance for the year. The reason I feel that's best practice is because it then gives the opportunity for the board again to go back and reassess and look at that, for the church and the minister to reassess the amount. And it keeps everybody informed and it becomes a sustainable practice versus something that gets forgotten about. What can the minister actually take as the housing allowance? That's up to the minister. That's on the responsibility of the minister to have that documentation. There's a few rare exceptions where it shifts to the church, but it's very rare. It's generally up to the minister to determine and have the documentation for what they claim is the housing allowance. And the housing allowance for them should be the lesser of either the fair market value of the rent of a property, the actual expenses, or the allowance amount that the church allocated. So if you're working with the minister and trying to give some counsel on how to set that housing allowance, it's better to set it as close as possible to actual, so that they align when the minister does his own taxes then. Another key consideration with ministers is that they are classified as self-employed for Social Security and Medicare, but not for income taxes. So that makes them very unique in that they have both classifications. A lot of ministers at this point are opting to do the voluntary withholding rather than paying estimated taxes. Because the church does not withhold or pay their portion of Social Security and Medicare, the pastor each period is incurring approximately 15% of payroll, just over that, per pay that has to then be submitted in taxes. And it becomes somewhat of an administrative burden potentially to the minister who has to track it and make quarterly estimates, et cetera. So instead, many of them have gone to doing voluntary withholding, where they can up their withholding to include that Social Security and Medicare, as well as the income tax withholding. Now, again, the income tax withholding is housing allowance is not subject to that income tax, but remember, withholding throughout the year is based on an estimate that is then formalized with filing of an individual tax return. So there's a lot of things here that can be slightly complex or confusing. So there's always opportunities to reach out, and there's a number of great resources. So don't hesitate to ask if you ever have questions on this. All right, contractors. This is a big one. There are a number of schools of thought around this and a number of cases that have gone either way. In general, the IRS is fighting hard to have everyone be an employee. And the reason for that is the tax compliance for employees is much higher than for contractors. And so they'd rather have employers be responsible for classifying as an employee so that there's compliance and they don't have to go chasing after it versus being a contractor. And the things with the new gig economy and so forth have really muddied this water, and sometimes it's more complex than it's originally thought to be. So some of the things I would consider here is periodically, first of all, you probably should go through and look at everybody that is working either as a contractor or employee and make sure that they're properly classified. And properly classified as an employee is either exempt or non-exempt. And then if they're a contractor, do they meet the checklists as a contractor? And there's a number of checklists out there from both state level as well as federal IRS level, as well as insurance potential. So you need to consider all of those things around the 1099. Now, in the past, when you had these contractors, you filed a 1099 miscellaneous. And that 1099 miscellaneous does still exist. But starting in 2020, they have a new form called the 1099 NEC, and it is non-employee compensation. And what used to be reported in box 7 on the miscellaneous form is now separately done on this NEC form. So for a lot of organizations, you may no longer have 1099 miscellaneouses. You may only have these NECs. The other thing to consider is before you get to the point where you have to issue the 1099s, consider it up front. Be proactive in assigning that role as a contractor. And one of the other things that has been seen more recently is the classifications coming under question if that contractor truly doesn't have business beyond the church. So one of the ones, and there's levels of risk here and things that can be analyzed, but one of the considerations is if you have somebody that plays the organ, do they really have other gigs playing the organ, or is that exclusive to the church? And that potentially, depending on who's analyzing and making the call, could be challenged as not being a true contractor. That's just one example. I know I've had a couple of examples where they then look to the contractor's website. Do they have a website, and are they soliciting business? So just a few considerations around contractors. Donors, that's obviously a big one. First off, you need to be clear on what's the delivery rule and when the donor or donation is eligible for 2020 treatment versus 2021. And it's always advisable, obviously, to be transparent and communicative with your donors. So I recommend that you somehow communicate this in a newsletter, bulletin, other communications, however it best fits your organization. But the prime consideration here is it's considered a 2020 contribution based on when it was delivered. So for instance, if it's a phone call, an online giving, a text giving, those are all going to be dated the date that you initiated the transaction. So those transactions would have to happen prior to 12/31. The same is true with credit cards. Credit cards generally are going to be processed on the same day that you put it through. So it's going to be the date on the credit card is what determines what year the donor can deduct the contribution. The one that has gotten confused and miscommunicated sometimes for churches is the mail delivery option. If they write a check, if a congregant writes a check in December and it's stamped, dated before December 31st, the church then can put that on their 2020 statement. What crosses the line is sometimes when it's dated in January, but the check is dated in December and they're asking you to put it back into the 2020 contributions. That's not technically correct. It's also not correct, and yet some churches do this, that your first service in January, you say, well, if you post-date your check, we'll still count it towards 2020. That's not okay either. It has to be in the year that you're receiving the delivery. And any offerings on site are obviously the day that it's collected, not the day that the check is written. So one consideration there. Donor statements are obviously a best practice because you want to be communicative and communicating with the donors. But the IRS requirements for this are explicitly laid out in publication 1771. And it even has the language that you need there. Most of you have done this before, but if you need it, that publication is much more user-friendly in terms of the practicality of getting the statements documented and out. The requirement is for any single gift of $250 or more. But then there's a number of other considerations around that, which is why I recommend that publication. The other thing is be careful too with cash versus non-cash, because the rules do change slightly when it's non-cash. And the documentation of what you're sending the donor is different when it's a non-cash statement. The other consideration is when you send those statements out. The donor technically cannot take the donation on their tax returns until they've received the documentation or donor statement from the church. So it's best practice, obviously, to get these out as soon as possible. Sometimes, they're even done by individual contribution of $250, but sometimes they're done on an annual basis. The idea, though, is to be timely so that there's no question for an individual donor's personal tax return having an invalid contribution potentially. Now, these last couple of ones on here don't apply for most, but I want to make sure that they're at least on your radar so that if they do, you're aware of them. So if you receive a gift of a non-cash gift of more than $5,000, Form 8282 is applicable. It is still primarily on the donor to have the sufficient documentation, including having the church and an independent appraisal conducted and so forth, for them to take that contribution as a deduction. And if challenged, it'll be on the donor generally. But again, we want to be good stewards. We want to come alongside. We don't want to be a roadblock. So the most beneficial thing you can do as the church is to provide the information and instructions. So if somebody comes to you with a non-cash gift, let's say that, we didn't get to get out on our boat this year, so we're going to donate our boat to the church. We think it's worth $50,000, okay? Because it's got a lot of sentimental value. All of those times we could go out with family. Well, you thank them kindly, and then you go through this process to make sure that there is a true valuation around that. The 1098C, I never thought of this that much for churches, but it actually has come into play a number of times for one of the churches that I work with, because the pastor does a regular sermon on opening up the storehouses. And so they get cars, boats. They haven't gotten an airplane yet, but if it's a car, boat, or an airplane, then this form is required. So just be aware of that. And then if you do any like bingo or raffles or those kind of things, know the rules around W2G, because that's the winnings from any gambling. It's not a 1099 issue, it's a W2G issue. And it only applies though, and you can structure your bingo or raffle to potentially avoid this. So it's one of those things to be proactive about if you're going to participate in that kind of situation. A couple others that come up periodically is churches are generally exempt from property taxes. Now, I can tell you in Wisconsin, it's required that you file every other year on the even numbered years. So this is 2020, you'd have to file for this year to retain that exemption. This is a location or a state determination. So if it's not Wisconsin, obviously you'll have to look at your individual state or contact us, and we'll be happy to try and navigate and find the answer. But that's something you don't want to miss, because that's an important benefit for the church, but it does need to be documented. And then volunteer gifts. What happens if you have Sunday school teachers and you give each of them a $5 gift card for Starbucks because they were just so awesome during the year? Do you have any reporting obligation? Well, in that case, no, because it doesn't hit the limits for the $600 for a 1099 or anything like that. So there it is up to, again, the individual volunteer to claim any gifts as applicable for their personal tax situation. Where you have to be careful with this, though, is obviously gifts that are gift cards are deemed as cash. So always treat gift cards like cash. And secondly, the things that you might not think of for a volunteer. So for instance, we ran into a situation a few years ago where parents were given lunch vouchers, hot lunch vouchers for their kids for volunteering for playground duty. Well, one volunteer was very active and managed to get hot lunch vouchers for all three of her kids doing playground duty. She was no longer a volunteer. So there's a line here that you do cross as well with, are they truly a volunteer or have they now become an employee? So keep that in mind. Just in contrast, this is not our primary topic today, but I'm happy to always answer questions. On your fiscal year end, here's a couple of the highlights. I mean, there can be a number more than this, but a couple of the big ones. Obviously, you're going to want to look at your budget and comparing it to prior year and getting that important information in terms of analyzing where you stand financially and how you're doing in terms of financial position. Considering UBIT, I should have probably spelled it out, I apologize, stands for Unrelated Business Income Tax. If you rent out your parking lot, or you have a cell tower, or you have advertising space that you sell in a newsletter or bulletin, you may be subject to UBIT. So this is an important conversation to have with your advisor or somebody who works with that to make sure that you are accounting for the things that need to be accounted for here. The rules around UBIT are very nuanced, and so please ask for help at any point because it's not a clear-cut situation. The same thing can be classified differently depending on the nuances and specifics to that particular church or organization. And UBIT is not something to necessarily be afraid of if it's a way to generate cash flow for your church, as long as you understand the responsibilities for tracking it in filing the return. The other big thing that I would recommend, obviously, you could do it on a calendar basis, but it's most often done on a fiscal year-end basis, is to make sure that employees and the board have signed a conflict of interest. One of the things the IRS looks very poorly on is any time that you have crossed that line where there's a private benefit out of a not-for-profit. And especially as religious organizations held to that higher standard and being above reproach, it's important that this is documented. In accounting world, we'll often say, if it's not documented, it didn't happen. So you may have the conversation, but if you don't document the conflict of interest in an annual signed policy, then it didn't happen. So I recommend doing that on an annual basis. And then just a couple other things that can help you make either the fiscal year end or the calendar year end a little easier is to have some monthly or quarterly processes as well. Depending on the size, for some churches, monthly may not be as crucial as for other ones. But if you're doing the ongoing reconciliations and some of these other items throughout the year, obviously you're going to have less work at the end of fiscal or calendar year if these things have already been taken care of. The third one on the list is one that is not always done consistently and is one of the things that does provide a great assurance level if you have to work with an auditor or an accountant for some kind of gap statement. But it also is a really good internal practice to have your donor database reconciled with what's recorded as contributions for your general ledger. So somebody generally who's doing the donor input hopefully is somebody separate from who's doing the general ledger. And now you're making sure that those two parties agree and things have gotten entered correctly. And it's a great way too to catch errors so that your donors get accurate statements and you don't have to resolve issues down the road. Same with 941s, because of the nuances with payroll reporting for churches. I recommend reconciling this and looking at it on a regular basis so you don't have this huge project at the end of the year. And then fixed assets are one of those things that it's going to depend on what your priorities are as an organization. If you are an organization that has no gap reporting requirements and don't foresee any gap reporting requirements, you may have different philosophies around fixed assets. If you're reporting anything gap related, or you think you may want to, this is an important piece, is to keep those fixed assets up to date. And I'll give you a quick example of that. The building, the church building. Most churches don't necessarily have that on their books because it's been around for quite a while. But I've even run across a number of newer churches that don't have that because when they're starting out, your focus is on so many things in launching ministries that you don't necessarily think about that. And to go backwards and capture that building cost can be quite a challenge down the road. So again, something to just keep on the radar to understand that if you are incurring significant, especially fixed asset additions or doing a remodel or tech overhaul, you may want to consider or ask the questions about how do I treat this? So, and that takes care of what I had. So back to you, Emily, and questions.
Perfect. Thank you, Melody. I just see one that came up in our chat, and it was towards the beginning of the presentation, but it was, can you discuss love gifts? I've heard this term when clergy retires, members of the church want to donate cash for the clergy for a goodbye gift.
Yeah. You want to take it, Hannah?
Sure, I can take that. any sort of love gift really is going to be taxable to the pastor. The big consideration is whether it's going to put them into an excessive compensation issue. So if you're going to do a year-end love gift appeal, which that phrase in and of itself can kind of be awkward to say, but you want to set a limit, because you could get somebody who would give something potentially that would put them over the limit of what would be excessive compensation. Now, there's not a specific dollar amount for that, but based on salary studies and just national surveys of compensation, you kind of can figure out what would be excessive at that point. But it is taxable to the pastor.
Perfect, thank you. And that's all the questions that we had came in during the presentation portion of the day. So I'll pass it over to Hannah before we do the breakout rooms for the afternoon.
Awesome.